If you are a young accountant or you are just starting your accounting career and you have always wondered that, is it the same debit and credit that we do in school is what happens in the real life? Then this video is for you. Hi guys, welcome back to my YouTube channel. If you are new here, my name is YAHCADEMY. I'm a chartered accountant and the convener of Young Accountants, or popularly known as YAHCADEMY. This is a community of young accountants where we help you to grow your accounting career and also help you ace your accounting exams. So if you're here to click on the subscribe button, please do that now, because we'll be releasing more accounting videos that can help you as you go in your career. Thank you to over 100 subscribers. Thank you so much for the love. Keep sharing, keep liking, and keep subscribing. Today, I'll be talking about the mystery of journal entry. What is journal entry in the accounting field? A journal entry is a story of what actually happens in a particular organization for a particular period of time. Journal entry is guided by a particular principle, which is called the double entry principle, which says for every debit entry, there must be a corresponding credit entry. Remember when you were in school and you have to write debit and credit for every question that you were given in financial accounting? Yes, it also applies in real life. Just a little difference between what we do in class and what happens in real life. So for me, while I was in school, I deduced a code that I use for my journal entry postings, which I call DEACIL, the seal. That is, debit all expenses and assets and credit all income and liabilities. It means that for every expenses and assets that you incur, you have to debit it. Either you are recognizing it for the first time, if it is a new expense or a new asset, or there's an increase in that expense or asset. All you need to do is to debit it. Or there's a decrease in the expense. What do? You do the reverse, which is what? Crediting them. For the other side, which is CIL, you credit all income and liabilities. If there's an increase in income or there's a new income, you credit it. If there's an increase in liability or there's a new liability, you do what? You credit it. And when there's a decrease in income and liability, you do the reverse by doing what? By debiting it. Let's say a company paid 500,000 for rent. The first thing you have to do when you get any journal entry question is to identify the effects of the transaction on the company. Company A paid for rent, right? You have to identify the two accounts that are involved, which is what? For you to pay, it means that your cash must have reduced. Then the second account is the rent account, the rent expense account. So what do? I said for every increase in assets, you do what? You debit it, and when there's a decrease in assets, you credit it. Now, your cash is an asset. Now you have gone ahead to pay for rent. What has happened to your cash? It has reduced. So you do what? You credit cash. For the rent expense, you do what? You debit your expense account. You debit rent account and credit what? Cash account. Into the second example. Let's say company A purchased some goods on credit. What is the account that are involved? You have your account payable. Then you have your inventory account. You debit your inventory since it's an asset and you've received it. Then you credit your account payable. Another example will be when you receive an income in advance. Debit your cash, then you credit unearned income, which is a liability account. So you are richer in cash, but you are not yet rich in revenue until service is provided. Let's go into what differentiates journal entry in the classroom from journal entry in real life. In many organizations today, they use accounting software such as QuickBooks, Sage, Zoho, or even internally built software that they use to record their transactions. When the service is being provided to their customers, they don't necessarily have to debit cash and credit revenue or debit account receivable and credit revenue. What they do is to raise an invoice, creating an account receivable item and a revenue item. What accounting software does is to post your journals for you using the source documents provided, like your invoice, like I've said earlier. Your work as an accountant is to ensure that whatever posting you have done through your source document is being posted correctly. Responsibility in such an environment is basically check. And if you don't understand the basic principles of journal entry, you yourself don't even understand what to be debited and what to be credited, then how then do you intend to check the accounting system you are currently using? Now let's move to the most confusing aspect. That's the cash basis and the accrual basis. Before we dive into it, tell me in the comment section which of these bases your organization is using. Is it the cash basis or the accrual basis? And we'll find out which is the best towards the end of the video. The accrual basis is an accounting method that captures revenue and expenses when they are earned and incurred, and not when cash is being paid or received. The cash basis says that you should capture your revenue and your expense when cash is received or paid. It captures the movement of cash. But the accrual basis tells the true story. For example, somebody approached me to provide an accounting service. Can you provide this service for me now? Then I'll get to pay you in December. What does the accrual concept does? In November, I am supposed to record that somebody has approached me for a service by debiting my account receivable and crediting my revenue. And in December, when the person finally pays, what do? I debit my cash or bank, then credit my what? Account receivable. In November, at the end of November, if I was to prepare an account for the period, it's going to show that I'm expecting money from so person as at November, right? Then by December, it will now show that the person has paid the money. But what does cash basis does? Cash basis will ignore the posting in November, then go straight to December when the cash is being received by debiting cash and crediting revenue. So the accrual basis helps to capture the true story of what happens in an organization, while the cash basis only recognizes the movement of cash. Let's now go into the tricky ones, e.g. depreciation. At the end of the month, after you've prepared your fixed assets register, your fixed asset schedule, you now want to post depreciation for that month. You know that depreciation is a non-cash expense, but still has to be recorded. This is where the cash basis is now faulty because money is not moving. You debit your depreciation expense account and you credit accumulated depreciation because value has been lost due to the usage of that asset. Another example is when you write off bad debts by debiting your bad debt expense account and crediting your account receivable. This also does not involve cash. Let's say your boss is owing you salary of December, then promises to pay in January. So what do you do in December? You are going to debit your salary expense account and credit your salary payable account. That is, you are accruing the liability. Then when you get to January, when you are being paid, you debit your what? Your salary payable account, then you credit cash. I hope you have learned something today, and I hope that you are going to make use of the accrual basis, because that is the basis that tells the story, the complete story of what happens in a particular organization at a particular point in time. Let me know what you learned. Drop it in the comment section and let me know what video you'll be expecting next from this channel. Also, don't forget the seal code, debit all expense and assets, credit all income and liability. And don't forget that every click that you make on that accounting software does a debit or credit behind the scene. So make sure to check what is happening behind the scene. So I'll see you later in my next video. Bye.